Stock market, some big swings as of late. A mix on Wall Street today. The Dow and S&P finished up. NASDAQ closed slightly down. Dale McCarthy, president of Retirement Designers Financial, joining us to talk about the market volatility. Thank you for joining us, Dale.
Thanks for having me.
Now, there are a lot of reasons for this volatility. It's not just one thing. There's a lot going on in the world right now, right?
And it is a lot to handle, especially for a stock market. We've got inflation at kind of all-time highs, at least in my lifetime. We've got the Fed raising rates to try and fight the inflation. We've got China lockdowns. We've got supply chain issues. We've got oil issues with the things going on with Russia, oil and gas, around the world. So lots of things to digest.
Do you think it'll change anytime soon, or is that hard to say?
It is hard to say. I tell my clients I wished I had a crystal ball so I knew exactly how to invest their money, but nobody has a crystal ball. It doesn't seem like things are changing anytime too soon. The supply chain issues don't seem to be correcting themselves as fast as people would like. And I think the supply chain issues have really added to that inflation component, really multiplied it.
For folks who are listening, and we can't really tell each and everyone what to do because it kind of depends on where you are in your life right now, doesn't it?
Yeah, it really does. I mean, when talking to people, everybody's situation is so unique. And with the volatility that we're seeing in the markets kind of at lows for the year, definitely it's going to depend on everybody's individual situation. The closer you get to retirement, obviously, hopefully, you've kind of adjusted your risk down a little bit and more aware of your kind of lifestyle situation.
But Dale, should you take your money out right now and keep it if you're retiring?
I don't believe so. I think we always should be long-term focused and invested for our future, but near-term aware. So you want to have enough assets set aside, obviously, that you don't have to sell at significant losses to get you through the next 1 to 3 years if we have continued volatility.
So this probably isn't just a blip. No,
it's not a blip. I mean, with inflation where it's at, I tell people with rising interest rates, be really conscious of the amount of debt you're taking on because the cost of that debt is going to go up. So if you have shorter interest or shorter term loans like credit cards and things, those interest rates are going to go up significantly and cost you a lot more in interest. So try and be very aware of your debt and your spending.
Yeah, those interest rates are rising.
Yeah, they're rising pretty quickly, and so it's kind of twofold. It's good and bad. The bad is our borrowing when we're going to buy a house, a car, or shorter-term things on our credit card, the cost of that borrowing is much more. But for people entering retirement and getting closer, or people just wanting to save money, the safer things like CDs and bonds, those interest rates should pay much better interest in the near-term future.
So if you're thinking of buying a house right now or a car, should you wait a few minutes or you should quickly do it?
Again, that's going to depend on the need and the person. I would think the first thing you want to look at, is it a need or a want? Do you really need to make that purchase, or do you want to make that purchase?
That makes sense. Thank you so much. Dale McCarthy, president of Retirement Designers Financial. Be safe, be well, sir.
Thank you, Micah.